Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the easiest swing trading strategy you guys can use, whether you're a beginner or maybe you're already an advanced trader just wanting to learn more strategies. This is simple. Anybody can do it, so I hope you guys all enjoy it. If you guys do, hit that like button, subscribe, and if you want to learn more about swing trading, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you how to trade, how to find stocks. This is not a get rich quick. This is not alerts. This is an 8-week course where we go step by step on how to become a trader. So I hope you guys all enjoy it, and you guys can get 47% off by using code LIONS, like the Detroit Lions, since they just won against the Cowboys 47-9. We're doing a 47% off sale for 2 spots. 2 people can use that code, so check it out down below and get your spot. So guys, let's jump into this and let's go. So the broker we are using here is Moomoo. They're absolutely fantastic. They're the broker I've been using for years, and this is why I love them, is because it's a trading broker. So check them out down below. You guys can get up to 20 free stocks, so check them out. All right, so let's look at here our trading journal. So one of the things that I think is very, very important here with trading is just keeping track of your trades, and more importantly, having a trading checklist so you can go in and make sure whatever stock you're going to buy follows this checklist. So this ensures that you're going to be choosing quality over quantity. So some of the positions here that we are in on is DX and ticker symbol BRFS and Tesla. We sold out of AJG here the other day, and so we're sitting up handsomely here. But why did we enter these positions? So glancing at our checklist here, so more importantly, we want to make sure the stock has an upward trend. Trends are like a river. It's always better to have the river at your back where you can swim downstream rather than upstream. I've always imagined a stock trend like that. It's a lot easier to buy when other buyers are buying. We want some sort of support. So support could be wherever the stock's just been getting recent tendencies of getting buying pressure. This could be at a certain price. This could be at indicators. So we'll look at that there too. Then we want an undervalued RSI, preferably under a 30 or a 35. We want to know the earnings date. I never hold through an earnings report because it's a 50-50 chance of making money. I'm sure you've seen companies like Nvidia where they release an earnings and the stock squeezes up 10%. But they've also released earnings where it squeezes down 10%. It's very, very risky holding through an earnings, so I don't do it. The next thing here is having a good risk and reward. You want to risk $1 to make $2, $3, $4. So this ensures you don't have to be perfect, but if you have good risk management, it will carry over into your trades. And then we want some sort of lower time frame support, preferably on the 1 hour time frame. So let's talk about our stocks here. So on ticker symbol DX here, our entry price is near around 1206. So looking at this, obviously we have this good upward trend, which is very, very important here. The next thing here is support. So you guys can see this blue line here. This blue line is called the 90-day moving average line. It acts as support. So you guys can see in the past, we've seen recent tendencies of getting good buying pressure there, right? You guys can see the past couple. So the main difference between the red and the blue is the red is the 200-day. It's going to act as a little bit of a harder support, harder resistance when the stock is under it here. So in an ideal situation, yes, you would want to buy it on the red line there, but it doesn't happen that often, as you guys can see in the past. So you guys can see it sold down to that 90-day moving average line. It also was undervalued on the RSI. The last time it was trading out of 37 on the RSI was back in here where we had this good buying pressure. Previous to that was in here. So, more importantly, looking at the RSI, you just want to review previous history because history tends to repeat itself in the stock market. So the next thing here that we want to look at here is risk and reward. So this is why I love Moomoo, because they have these trading tools like this long position tool. So we can see here, entering at that 90-day moving average line, setting our target back up to resistance is about a 7-to-1 risk and reward. So with this type of trade, you could be wrong 6 times with these types of stocks and still make money in the long run. So this is why having a good broker, having good risk management is incredibly important. So the last thing here that I want to do is going in and looking at why we entered this position. So you guys can see at the time of purchase, the stock was actually selling off. So how do you know when it's going to reverse? So there's a lot of different approaches. You can enter on the first breakout of the trend. That's what we did, and we set our stop loss just below that lowest wick. This ensures good risk management, and this ensures if we do get some sort of trend reversal where it continues to get sell off, then we can just cut our losses very, very early. You guys can see it did form more support here on this trend line right there, and the stock has been slowly moving higher and higher. And yes, we're up about 4.5%, which might not seem like much, but like I said, as a trader, one of the most important things you need to be is consistent and focus on base hits. Don't expect to make $1 million when you trade. Focus on those 1, 2, 3, 4% returns that just compound over the course of a year. That's what makes up a very, very successful trader here. So another position that we are in on is ticker symbol BRFS. So this one here is a very similar stock, as you guys notice. Stock has that good upward trend, but more importantly here, what it has is 2 supports. It has this general trend support, so you guys can see how many times it hit it, and we have good buying pressure there. So now looking at it, you want to buy on the trend line. Another indicator that it had here is going to be the 90-day moving average line. You guys can see it hit it. We had that good move. So how do you know when to buy? So looking back here, you guys can see that actually what we did is pretty much the exact same thing here. The stock sold off like that. We entered on that breakout. Now, yes, the stock here did dip down. We actually almost did get stopped out, but luckily we keep our stop loss just below the lowest, the lowest candlestick. So we were still good. And then the stock has broke out. It's actually trading above that 200-day moving average line, which is a very bullish thing for the stock to do. The last time it did that, you guys can see the stock went from about 430 all the way up to about 470, which might not seem like a big move. It might not, but looking at it percent-wise, that's 6%, and I'll take that any day of the week. The last stock we're holding is probably the lowest stock here that we have money in and hoping, and this is Tesla. I'm a huge Tesla bull. I own a bunch for long term, but looking at it here, you guys can see it did find heavy support due to the bad the robo taxi event. Stock sold off. I thought it was a very, very over reaction in the market, so we bought some shares, found some heavy support, kept our stop loss below it. Stock has been rallying slowly up, very slowly. So hopefully in the next couple of weeks, we can get some buying pressure back up and fill that gap there. That's kind of the thought behind that one, as well as it does have, if it will load, a general trend line here on this here. As you guys look at it, you guys can see it hits it several times. It's forming a good trend line, and it's relatively undervalued on the RSI. So with trading, one of the most important things, like I said, is just being consistent. Don't expect to make $1 million. Focus on those small returns that just compound over the course of a year. So guys, I hope you guys all enjoyed it. If you guys did, hit the like button, subscribe, and check out our school. It's the Swing Trading Masterclass, and we'll see you guys in there. Take care.